Welcome to the Wall Street Crossover Show, brought to you by Tip TV in conjunction with our sponsors Admiral Markets. If you're tuning in, normally Darren Sindler would be sitting here from Admiral Markets, but he's away on vacation. We're joined by Mr. Craig Drake, market commentator. How are you doing, young Craig?
I'm very well.
Right, it's Thursday, 25th of June. All eyes are Greece, Greece and Greece.
Yeah.
Does anything else matter at the moment?
Yeah, well, it's quite, as much as everybody's sick of talking about Greece, it's fairly unavoidable. It's in the kind of the first two kind of things we're looking at in the slides today. You can see where it's just spilling over everywhere within Europe. Like you look at German consumer confidence numbers that came out today. We had that GfK. If we kind of go on the first slide, we had that GfK consumer confidence survey looking at German consumers. And these kind of the survey came back, and it was showing weaker numbers, and seeing from German consumers that they're cautious because they're worried about the effects of Greece. And while kind of Greece may not actually impact on Germany that much, what's happening in Greece doesn't really affect German consumers, but it does matter to their sentiment. If people are thinking, we may be in tricky times ahead, even if Germany is reasonably isolated from what's happening in Greece, and even if the German consumer is many steps further isolated, down the food chain from anything happening there, that perception is going to knock on. That's when you start to get problems, is when people start to defer things. And also, you've got this second bullet point looking at, so this morning, the SNB chairman, the Swiss National Bank chairman, Thomas Jordan spoke. And I feel like there's a risk here that people have let what's happening, let the Swiss franc out of their minds a bit. And I've kind of done this in the past. And the Swiss franc comes back to bite people, as we've seen this year. A lot of people watching this show will have had a lot of pain earlier this year. Yep. They had that pretty nasty shock. There's nothing to stop it from happening again. If they bring that floor in again, you look at Euro Swiss has moved towards 13%. Swiss francs appreciated 13% against the euro. That's going to start to hurt Switzerland. And you remember the last time they brought that floor in was in 2011 because of exactly what's happening at the moment. Because we had so much kind of nervousness in Europe, because we had so much kind of fear over Greece. People started parking cash in Swiss francs to try and, as a kind of haven currency. If we start to really see that again, if we see Greece default, that's going to smash that Swiss franc back up again. 13% is a fair amount of appreciation for a country that does the majority of its trading with Europe and with euro-denominated customers. So if we see any real shocks happen from Greece, you should watch out for Thomas Jordan coming in and putting in some fairly drastic measures. He's already proposed negative interest rates to try and ward off some of that capital appreciation happening there, but I think that's something to look out for.
Understood. Finally, CBI distributed trade surveys.
Yeah, I mean, British consumers aren't spending as much as retailers may have hoped, but of course they're never going to spend as much as retailers would hope. Yep. It was slightly weaker than I expected, but I think this summer is going to be a good summer for retailers.
Is that down to the weather predominantly?
Well, I think it's down to inflation. It's down to increased discretionary spending power. We've got this great low inflation. As Mark Carney keeps telling people, take advantage of this where you can. Yeah. We've had wage upside. We've finally had real wage increases where in the past we've had some upside, but it's been stripped out by inflation. We're at that point now where we have genuine real wage hikes. People are feeling richer each month. Right. I think we're going to have a good, that's going to be then passed through to retail spending.
Understood. Okay, so let's move on to the European movers.
I mean, this is just dominated by Greece. It's unavoidable. You can dial down
drops, rebounds.
Yeah, I mean, you can dial down into individual stocks, but at the moment, everything that's happening in Europe is being almost entirely driven by Greece. You look across. It's essentially just a barometer of everything that's going on. It's completely a sentiment-driven market at the moment, and I've not picked individual stocks simply for that reason, because everything is just coming from Greece.
Understood. Okay, so let's go on to M&A, sort of rumours and movers. Anything on your board this morning?
There's not a huge amount happening in M&A, but we do have a fairly solid calendar of earnings. We've got Barnes & Noble, we've got Micron Technology. We've generally got quite a lot of optimism going for Micron after with consensus earnings for 58 cents a share. But the big one today is Nike. I think that's going to be the big focus. I think we're going to see some strong results out there. Lots of analysts are expecting good results, but then I think the kind of expectations is, if anything, we're going to see upside on there. They had a lot of kind of headwinds trying to crack China, but we've seen kind of indications that Chinese market is really building for Nike. They've had a lot of kind of high-profile sponsorship deals. They had the Women's World Cup. They were fairly heavily featured there. And they've done a big deal with the NBA for a merchandising deal. You look at the momentum for the last quarter earnings. I think we're going to see some strong upside there.
So strong upside. I actually bought a pair of Nike trainers at the weekend.
That's a leading indicator if ever you want one.
Okay, so let's move on to US data points to keep an eye on today.
I mean, we've got continuous jobless claims, we've got initial jobless claims. They're probably not going to be as strong as last time. I mean, we had some very strong numbers. We had strong non-farm payrolls, remember. Yeah. We had non-farm payrolls come out 280k after, against an expectation of 226. We've seen that. That's, I think, as far as the economy goes, I think we can kind of take strong employment numbers as a given. We're at, unemployment at 5.5%, which is pretty close to that kind of full employment rate as far as the US goes, of what's generally accepted about this kind of 2.2, 2.3% level. So 5.2, 5.3% level is roughly where people kind of pin full employment.
Is that full employment?
Yeah, well, I mean, as far as people who want
textbooks anyway.
Yeah. So I think as we talk about the kind of this data-driven Fed, I think they've kind of it's taken as a given. We're going to keep having strong numbers. You remember a year ago when it was 180 was a big number. Now it's just taken as a given. We're going to have 200 plus every time,
right. And
you're going to see the same initial jobless. Which kind of feeds through. We've got Jerome Powell speaking today. He spoke earlier this week, and then he's kind of a leaning hawk within the FOMC. He's a voting member. Obviously, he was picked over. Obama's first choice was MIT economist Peter Diamond, who was never going to get through. He was going to get rejected on the floor because he was more of a Keynesian leaning economist. But Powell's seen as the kind of conservative pick for Obama. And so he's kind of definitely on the hawkish side. And when he spoke on Tuesday, he was saying that we could see 2 rate hikes this year. He's saying that the stock market isn't really showing signs of a bubble. Yes, we do have strength there. It's not necessarily bubbly, but obviously, we've got these jobless numbers nailed down. We've seen strength in the labour markets, but the big issue is inflation numbers, and that's where I think that's what he's going to focus on. We're still not at that 2% target rate. Right. I think that's going to be the big focus. We've moved away from jobs now, and inflation is going to be the big one. Just how transitory is this period of low inflation?
Understood. Okay, so let's go on to the final slide: the US pre-market movers and chart levels. We've just got some chart levels today.
Yeah, I mean, again here, this is like euro dollar. Everything, USD JPY, a lot of it is sentiment driven. I think, again, there's not a huge amount of stuff happening elsewhere. We're going to have, we see some strength in US jobs numbers. We might see a bit of short-term pickup in dollar. We may see a few little things, but mostly this is a sentiment-driven market. This is Greece driving sentiment. This is fear-driven markets. Whatever happens in Greece, I think it's unlikely we're going to see any resolution today. But any positive signs, we'll see the strengthening of the euro. We'll see a bit of improvement in sentiment. But other than that, I think the only thing that's going to happen is these talks are going to flop. I think that's the most likely outcome, and we're going to see a bit of a flight to safety.
Understood. Okay, Craig Drake, market commentator, thank you very much for that. That wraps up the Wall Street crossover show. We'll be back same time tomorrow at 1 p.m. Have a good day. Thank you.